My name is Simon Harrop. I run a business called Straight Ahead Sales. It has nothing to do with property, so you're wondering why I'm here as doing the welcoming speech. I'm a member of the New South Wales Business Chamber, and I'm also president of the Regional Council, the Regional Advisory Council for the Sydney Northern Region. So that's why I'm here today. So thank you everyone for making the time to come along today. I really appreciate it. This is a really important topic and a really interesting subject that we'll be getting into a little bit later. I would also like to welcome the Mayor of North Sydney, Gilly Gibson. Also Penny Holloway, who is the CEO and General Manager of North Sydney Council. And we also have Meg McDonald, who is the CEO of Low Carbon Australia. The New South Wales Business Chamber has over 12,000 members. Now this is a milestone for the Business Chamber. I joined 5 years ago and there were 5,000 members. So we're a very large representation of businesses in New South Wales. There are 5 regions within Sydney, and our region in Sydney North represents 1,200 members. So we have 10% of the New South Wales members. So this is a very important region for the New South Wales Business Chamber. I was thinking a little bit about North Sydney because I've lived in this area for over 35 years. I've watched this business district grow significantly. It was a small collection of commercial buildings to a significant commercial, residential, retail and education growth area of Sydney and also of Australia. It's wonderful to see North Sydney Council, who has always been progressive, to continue to focus on the environment as to how we can be more efficient in our use of energy. I recently worked with one of my clients who is an energy efficiency expert and consultant within the mining industry. And he has a very practical and realistic approach. And there was one particular consultancy that he did with a very big mine, and they've got all the ventilation systems that run through the mines, which draw an enormous amount of energy to make sure when you've got an underground mine that you have enough air to breathe down there and to circulate. And he found out that the generators were actually overloading and they were using too much energy and too much power. And he came up with a very simple solution. He went to Bunnings and bought a wire brush for $5. And he actually found out where the ventilation system, the filters were covered in bugs and in dust. And he was actually able to save that business a couple of $100,000 a year just on a simple thing as far as a wire brush. Now I'm not too sure if the EUA does go to wire brushes, but it may. You may be able to negotiate that. So I've learned over the years that energy efficiency is much more than just turning the lights off. It's actually a cultural and behavioural change. So I think as business leaders, it's up to us to take some actions around this, and that's why I think this is a really good initiative. So hopefully in the next 10 years, when my young kids are heading into North Sydney to work, to get educated, to shop, maybe to have a coffee up at the Miller's Treat, that when they come into this area, it will actually be more energy efficient than I used to come in on the old Leyland bus many years ago. I would like to now welcome the Mayor of North Sydney, Gilly Gibson. Thank you.
Good afternoon and welcome to you all at this official launch of our Environmental Upgrade Agreement program. And thank you for making time to be with us today. I like to think of the North Sydney CBD as a quiet achiever. While our community would like to see a little more nightlife and social vibrancy in the CBD, our achievements as a commercial centre are significant. So before you learn about environmental upgrade agreements and how they work, I want to take a few moments to outline the credentials of this great CBD. North Sydney is the second largest CBD in Sydney and the 7th largest in Australia, providing employment for about 32,000 people. Our most significant strength is our location. We have road, rail, bus and ferry connections to all of Sydney. We're just 5 minutes from the Sydney CBD and just 20 minutes to the airport on a good day. We also offer all of the services that businesses need, including financial, legal, medical, childcare and retail services. And of course, we have some of the world's best views. We know businesses value these things because a recent survey found that 7 out of 10 local business managers thought North Sydney was an ideal location for their business. North Sydney is not only a good place to locate a business, it's also a good property investment. The centre's performance on income and capital growth return has been consistently solid over the last 5 years. The latest information available shows the North Sydney commercial office market had the highest total return of all the Sydney commercial property markets in 2011, with a total annual return of 10.3%. North Sydney currently has one of the lowest commercial property vacancy rates in Sydney. Importantly, the CBD now has a good mix of tenants from a range of industry sectors, including property, finance, communications and construction. This means we're no longer vulnerable to the fortunes of just one or two industries, as we have been in the past. I am confident that North Sydney CBD will continue to perform well in the years to come. Having said that, we've just had an election and a new council, and we're not sitting on our laurels. There's fresh energy and a lot of new councillors, and I'm a new mayor, and we're certainly going to make sure that some things happen over the next 4 years. Myself and the other councillors, we're committed to a CBD that will be internationally recognised as a place for innovation, excellence and ecological sustainable development. The EUA program will play an important role in achieving these goals. As you will hear from today's speakers, an EUA opens doors for building owners to undertake work which will not only improve the environmental efficiency of their building, but also their economic bottom line. Independent studies have shown that upgrading a building's environmental efficiency helps to attract higher calibre tenants and encourages longer term leases. This in turn can fetch higher rents and increase the value of the asset. I am delighted that we can help our commercial ratepayers save money and at the same time maintain our commitment to sustainability. I'm personally excited about the future of the North Sydney CBD. I have a vision of a melting pot of stakeholders who will enjoy world-class facilities. I want to inject life into the CBD and reposition it both as a commercial and entertainment hub that can host significant cultural festivals. I want North Sydney to be a destination not only for workers but for residents and visitors too. A few things we've done already since I started on this new council. We're in negotiations with Vivid, the Vivid Light Festival, and it looks as though it's pretty certain that it will be coming to North Sydney, and we're really hopeful that in fact will be coming this winter, which just in May, which is only 2 months ago, so we're pulling out all stops to make it happen for May. We've also done a few other exciting things like renaming Mount Street Plaza Brett Whiteley Place, just to show that we're going to head towards having a new heart in the CBD and make it an artistic hub. So we've jumped in with some good ideas and some energy. So to this end, we've also set up a working group that will explore strategies for renewing the CBD. We'll be looking at short-term and long-term strategies. We've already had our first meeting, which was exciting and very successful. Lots of interesting and interested people gathered together for the first meeting, and we had a blackboard full of ideas within the first hour. So I think there's a real mood to start this revitalisation program and fast track it, and that's certainly what we intend to do. So we've got, as I say, the CBD working group is just one way that we're intending to show that we mean business. We've got ideas and we're starting right now. So environmental upgrades to the North Sydney building stock are a key part of the bigger picture. They will be an important platform for maintaining a strong and healthy property market and a thriving business community. So to finish, thank you all for coming today, and I'm sure we'll have time to have more informal chats later on, and I'm sure you're going to be very interested in all the presentations today and learning more about our EUA program. And myself and the General Manager and North Sydney Council look forward to working with you over the next few years as this exciting program develops and unfolds. Thank you.
And hi everybody, my name is Meg McDonald. I'm the CEO of Low Carbon Australia, and now it's my great pleasure to introduce our guest speaker for this lunch today. Anthony Di Francesco is from IPD and is well known to many of you, the work that IPD does, and certainly their Green Index has been absolutely critical in being able to demonstrate what some of the benefits from having a greener building stock and improvements to energy efficiency Neighbours ratings. So now I'd like to ask you to welcome Anthony to the stage. Thanks.
Thank you to have the opportunity to speak to you this afternoon. Just to give you a quick overview in terms of, look, who is IPD for those who don't know? We're basically an independent information provider in the commercial property space. So we actually produce a lot of commercial property indices that measure the investment return performance of property assets. And one particular initiative that we did embarked on a few years ago was to establish a green index. And what this green index effectively is basically a way to measure or provide guide to what could be the investment value proposition of a building which undertakes sustainable or green type initiatives or elements. So I'll go through that in a little while. But broadly, IPD, we're a global information provider, and you can see there through the green spots that I've highlighted there, where IPD is undertaking these green type of metrics to really try to provide an increased transparency to the whole debate about sustainability, but also sort of raise the discussion and the debate. So that gives you a bit of an overview about IPD. About the Green Index and how we go about this. Basically what we do is we capture individual asset information from each of the asset owners or the managers. So there's a twofold process. You can see here we bring together all the property asset information, the relative metrics being returns, pricing metrics in terms of yields, but also vacancy rate, rents, outgoings, all the various sort of financial metrics you would expect. What we then do is we overlay that with environmental rating performance metrics. And there's two key measures that we look at. The Green Star ratings provided by the Green Building Council of Australia, and also the star ratings delivered by Neighbours. So what we do is we link together both the performance of the building, but we then stratify it accordingly to those particular ratings sort of substrands. And we can actually dissect in the market, the office sector market, by market type, so CBD, non-CBD. We can look at the quality spectrum of the office buildings, whether they're prime assets or whether they're secondary type assets. We could look at the region, whether they or the location, whether they're Sydney-based, North Sydney-based, across the various CBD markets around Australia. But we can also look at the age of the building, and that means, so understand if we hold constant for the age of that building, do we still get a value add contribution? So these are the various dimensions that we can actually dissect the data set. So that's a bit of an overview in terms of the actual data and how we go about it. Just quickly, what I want to do is just share with you what is the size of the pool of this information. So you can see quite clearly here, we're talking about 400 odd assets. These are commercial, institutional grade assets in the commercial property market at a value of about $53 billion. and we got 30 participants, and I've listed the participants there, really just to give you a bit of an overview in terms of the breadth and the depth of the coverage that we have with this database. So, you know, it's not a small sample, it's actually quite an extensive sample right across the whole sector and industry. Okay, so that's a bit of a background in terms of the database structure as well. So let's go to the results. So when we look at the results, one of the key investment metrics is the total return. And the total return is what you would the investor would get back on the building in terms, if he invested $1, what would he get back on that dollar? And the way we do it is we broke it up into two components. What is the income contribution? And that's the income return. So effectively, it's the rental income stream that you get on the building, as well as the capital growth component. And that effectively is the capital value upside that you get accordingly to the building. So just to take you through this, and what I've done here is just said, let's look at all office buildings. What would be the return? So all office buildings, the annual return as at December 2012 was 9.7%. And then what we said is, now let's just look at those buildings that have a green star rating. And the return on that was 10.6. And then we can further refine the sample and say, if they had a 4-star rating, what would it be? 10.7, a 5-star 10.7, a 6-star 10.2. So the important point here is that buildings that have a green building star rating actually deliver a higher investment return. And you can see that it predominantly comes about through a combination of the income component in blue, in sort of that bluish-green coloured bar, and also the capital growth component. And I'll talk a bit more about that in a minute. But what's interesting there is that the investment return performance will vary across those green star ratings. And that's because the time scale that you need to actually, of those benefits to come through, will be quite different across the star ratings, because the hurdle rate for that investment return will be different, because the cost, obviously, as you move up the rating star chain, will actually increase as well. So that's the first point. The next point is, we can also look at this not just for Green Star rated buildings, but also for Neighbours rated buildings. And this is a measure for existing buildings. And again, I've done a similar sort of thing here. If everyone firstly looks at the first bar, and again, we're just focusing now on CBD office buildings. 9.8% was the total return to 2012. And just look at Australia total, we can see again, all stars, so all buildings that have a Neighbours rating delivered 9.9. It won't be that different to the 9.8 because it's effectively the same sample. But what you see, as soon as you start to segment the ratings by band, so if you've got a star rating between 0 and 3.5, and a rating between 4 and 6, you get a very different investment return. And we've actually done this to highlight that a building with a Neighbours Energy low rating delivers a significantly lower investment return than if you have a Neighbours Energy rated building with a rating between 4 and 6 star. So this is really the value proposition. But more importantly is that we need to understand that not just for Australia, but across markets. Why is that important? Because each market has a different investment return profile. So the relative benchmarks becomes against each market. And I've picked two here, for example. Sydney CBD, again, all buildings delivered 8.3. If you had a Neighbours Energy 0 to 3.5, it only delivered 7.1. But if you had a 4 to 6 star Neighbours rating, it delivered 8.9. And again, you can see if we look at the Melbourne CBD market, that sort of, there's a conformity in terms of those results once again. 10.9 for the total, 8.4 for 0 to 3.5, so the low Neighbours rated, but the high Neighbours rated 12.1%, an outperformance there. So again, we see this outperformance between 12.1 to 10.9, 8.9 to 8.3, this 10.5 to 9.1, consistent right throughout the various sub-markets, and that's the key point to sort of home in on. Look, we can break this data, as I said, by quality. So if we did a prime secondary split, we'll get a similar sort of result. And also we can break it by CBD, non-CBD. So no matter how we cut and dice it, we get this sort of qualitative result. An interesting study that we did as well was not just look at investment return, but also the cap rate, or the long-term sort of investment yield that you get on the investment. And again, just to put it in context, I've provided here for summary. So the first chart shows the performance on Green Star rated buildings. The second chart is on Neighbours rated buildings. So the investment returns, we've already looked at that. Now let's look at the cap rate, and you can see quite clearly here as you go to, and these results over a 3-year average, and I really took a longer time period just to show that we got this result, consistently outperforming every year. Right? And you can see here the cap rate on the star rated buildings actually is lower, and that's exactly what you would expect. We actually see a premium there in the order of about 10 bips. And that really tells us or signals to us that we actually see a de-risking in those assets, right? And why would we expect that? Because if the building has a higher rating, we tend to associate with that the time to tenant up the building would be shorter. The ability to get a rental upside would be higher, and those particular space market features together actually de-risk the building, right? So that's where that value proposition is coming through. Again, if you look at the Neighbours results, once again, what I've done is, and if we just look at the last 3 bars, all A-grade star-rated buildings, 7.6% cap rate. If you look at the A-grade 0 to 3.5 stars, 7.7. The A-grade 4 to 6 stars, 7.5. So there's your premium in a way, your outperformance. If you've got in this case, you've got a 20 bit between the low Neighbours and the high Neighbours, but on average to the all-stars, it's 10 bip. And again, that's something that we're finding right across the board. And that's partly the value proposition. So not only is it through the income stream, but on the capital asset side as well, right? Which the capital markets or the valuers are rewarding because of the quality of the building. And look, to some extent, based on the previous chart we saw as well, it's a function of the tenancy profile. So where the tenancy profile is highly skewed towards premium and quality type assets, there's going to be more of an orientation for those tenants to demand better quality buildings and the green initiatives, and yet the premium that they place on that will be much higher than secondary type assets. And that's something that we found within the sample. And look, second last chart, the other thing is, what is really important is to say, how robust are these results? And look, one of the criticisms that was brought to IPD right at the start is, well, you're only getting that result because it's a new building. In fact, what we've done is to try to sort of add sort of strength to this debate, we've taken buildings and we've put them in age cohorts. So, what was the year that those buildings were developed? So this is buildings of all ages, irrespective of when the building was built. These are buildings that were refurbed over the last 5 years. And these are, again, just relates to Neighbours Energy. And again, you can see that you've got this outperformance to come through. So even if we hold for, or we accommodate for the age of the building, we're still getting this outperformance. And this all adds to the value proposition or the robustness of it. Lastly, what I want to leave you with, look, I know there's a lot of stats and colours, but it's my job to do this. But look, the interesting point here is, really interesting is, we've just embarked on a project to extend the study and not just look at Australia, but also New Zealand. And we're actually finding very similar results. So you can see quite clearly here, office market in New Zealand, all buildings, 7.1, the rated buildings, 8.9, non-rated buildings, 6.4. And we get that similar sort of result over the last 2 and 3 years as well. So this is not just a phenomena or a feature that we're seeing in the Australian market. It's something that we've also found in the New Zealand market, more distinctly so. And look, we're in a point where we'll be able to release Neighbours rated information for New Zealand as that evolves. So look, it's very short, very sweet, but some high level numbers really to highlight the value proposition. Happy to speak to anyone afterwards, and I can tell you the amount of scrutiny and vetting that we go through into the numbers. We stand by these numbers with a sense of confidence and conviction. So thank you very much.
Now I'd like to introduce our panel for the lunch. And while I'm doing so, I'll just tell you a little bit about Low Carbon Australia. We're a fund that was set up by the Australian Government in 2010 to invest in energy efficiency projects and to bring new ways of financing energy efficiency and low carbon energy into the marketplace. And we've been operating 3 years, and introducing environmental upgrade finance has been one of the cornerstones of the work that we've done. We've just about invested our $85 million fund from the federal government and about to be merged into the Clean Energy Finance Corporation, which was established last year by the federal government as part of the Clean Energy Future Package. And what that does is give us an opportunity to expand the financing for programs like environmental upgrade finance, so that we really will be able to scale out and meet what we think is going to be a growing market for environmental upgrade finance. As you saw from the video and you heard from the Mayor, there's an enormous potential for this new finance, and it is rapidly gaining acceptance and being rolled out across a number of local governments here in New South Wales. We were pleased to be able to announce yesterday the first major environmental upgrade finance project in the city of Sydney, and I'm sure Niall McCarthy, one of our panellists, is going to be able to tell you a lot about that. And as you heard as well, we did a project in Parramatta, which was announced last year, and I'm sure that we'll be able to hear a lot about that as well from Grant Nichols, also one of our panellists. So following this, I'm going to ask each of these panellists to present a short presentation to you on their key insights into environmental upgrade finance and the benefits of upgrading the efficiency of buildings. So the first person that I'd like is Steve, here on the left. Perhaps if you'd like to speak.
Well, can I tell you, there are a lot of mediocre buildings out there that perform poorly, but there are also a lot of good buildings that perform poorly. There are also a number of buildings that you and I might describe as average that actually perform extremely well, that have quite high Neighbours scores. One thing in common with all of these buildings is management. And you can imagine that if a poor or average building is well managed, the chances are it's going to perform better than a good building that's mismanaged.
Just looking at tenant buy-in in North Sydney in particular, it is mixed. Large corporations, they have their own benchmarks, they have their own hurdles on sustainability. Small organisations, small companies are much more focused on the survival of their own business, and they tend not to have these benchmarks. So when we did a survey of all the leasing agents and the tenant representatives, we found around about 20% of all tenants, only 20%, have a desired outcome for their sustainability for the premises that they're going.
We have capital now to invest in energy efficiency upgrades, and we're delighted that North Sydney Council have embraced the EUA programme because we see there's a lot of opportunity for building owners in North Sydney.
You may well have an opportunity to repay that debt entirely from the savings you generate through a tenant pass-through within 5 to 7 years. So from that perspective, the landlord is getting an upgraded building with not having to contribute a cent. So that is something that is very attractive to the landlord.
And when you go through and tell people, look, we could upgrade your building for little or no capital cost, the first point they come back is, well, what's the trick? The answer is there is no trick. The other one is that it's the energy savings that pay for this upgrade, not the actual tenant.
With that, thank you very much, and I'd ask you to give a round of applause to all of the members of the panel. And I'd finally like to conclude by not only thanking the panel, but thanking the Mayor and Penny from North Sydney for embarking on this journey with us. I hope that this event and hearing from those that are actually involved in environmental upgrade agreements elsewhere have really provided you with some real insight into just how much work has gone into developing this and what a great opportunity it represents for not only North Sydney but the whole of New South Wales, and hopefully some of the other states will come on board as well. We certainly think that it is going to herald a big change to the way some people think about upgrading building stock and improving environmental performance, but more importantly, holding costs down, and that those improvements in not only energy savings but also the productivity benefits that you've heard about from the panel are really things that we're only just starting to understand how deep those benefits can be from tackling building stock, which hitherto probably was not thought to be able to be upgraded in this way because of the lack of availability of this sort of finance. And we've been very lucky to have here today some of the people that were at the very forefront of development of environmental upgrade agreements, who've been living with this for 3 or 4 years to bring it to this stage, and we're very, very excited that North Sydney will be here with us. And I'd also like to thank the New South Wales Business Chamber for hosting us here today. It's been a fantastic event. I hope you've all learned a lot, and that you're going to be inundating some of our panellists and some of the financiers here in the room with opportunities for perhaps looking at environmental upgrades here in North Sydney. We'd love to be back here with a round of successful upgrades by this time next year. So can I thank you all very much and wish you a good afternoon. Thank you.